The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovably soft host. And of course, the Power Trading Hour, where there's no bull side, no bear side, just the right side. And of course, the right side is the bear side. So what do we have going on today? Well, we always like to meet at this time.
The following takes place between 2 p.m. and 3 p.m.
Off 8.5 points on the S&P cash, 2.36 billion shares. So we've got more volume. We did yesterday. In fact, significantly more, maybe 15, 20% more volume going in to 6 o'clock last night. I have been bearish and have not wavered from that position. I thought it would be tough to hold through. But the problem would be when the position came, when the time came, it would be very hard to get everybody short in my newsletters. So we've been short for a little while. But I think, well, I've got one here that I think is going to be another huge winner, like our IBB trade. I think I got a monster coming this way. Got some other ones. We added 2 new positions short in the last day. And I suspect that things are really getting warmed up for action over the next few weeks between now and Election Day. What else do we have going on? Like I said, closing in on 2.4 billion shares. We're off 8 points, which wouldn't be that big a deal. But this is exactly how the market acted when we were up here at 2175, 2180. You would get back up there, all the volume would fall off. In this case, the volume falls off at 2140. They keep pushing the market up. Everybody wants to buy a pullback. No one wants to buy the breakout. And we get this ratcheting action that discontinues moving lower. But my guess is that we're going to blow out these bottoms. 2080 would not be beyond the scope of reason in the next couple of days. And then once we break that, we might congest for a little while. But I think we're probably before options expire in November, going to see a fairly significant move below 2,000 on the S&P cash. So we will see. Not much, probably not much past 2,000, but I think we're going to have kind of a nice little flush going into the end of the year. That is pretty much based on what I've said since September, which is the most single important chart in the market is that TLT. We're off 76 cents on it at 132.32. I suspect we will wake up one day and the thing is just going to gap down to that 128 level, leaving a lot of people very high and dry. Even with the move in the dollar today, a little lower at 98.61, my guess is that we're going to follow that TLT down until we hit 128 with the equities. 2135 on the S&P cash. And, of course, we always like to start off the day with a little bit of history.
That it's all just a little bit of history repeating.
On this day in 1998, Hurricane Mitch hit Central America. And the storm, the most deadly hurricane to hit the Western Hemisphere in more than 200 years, went on to kill thousands of people. I remember this hugely because on this date, 1998, I was coming back from down there in Honduras. I had gone on many a trip on the bareboat cruises. If you remember the advertisements from the 80s and 90s, they bought a bunch of 200 and 300 foot schooners and just big sailing ships built in the Gilded Age around the 1920s and 30s. I'd gone on about 6 of these cruises, made good friends with a couple of the captains who happened to be twin brothers, Captain Guyan March and his brother. I just happened to lock on to Guyan and went on many, many trips with him. On this day, they stuck us back on a airliner, and I flew back home. But that ship went out never to return. Ended up being a ship that was not only the loss of life of 30 people on board, of all the crew who tried to save the ship, but it was uninsured and led to the demise of the entire cruise industry for that, what they called barefoot cruises out there. But I will always remember it. It was the Fantôme. I'd been on it many times and made good friends with the captain. He used to come up here. It's like to spend his vacations here in Tampa. And I don't know how many people in Tampa or actually in Palm Harbor have been to it, but there's a place called Molly Goodhead's that he just really loved. I know everybody has their story of disaster. Andy Heck, of course, was in the shadow of 9/11 and the Twin Towers coming down. Tom was in the big hurricane out there in New Orleans. Probably the closest I would say to my biggest disaster was this hurricane and the loss of 30 good souls on the SS Fantôme. You can always Google that. But a fine ship and a fine captain. Now we move on to bigger news out here, and that is Apple. Apple may have hit some targets that had been moved down. Investors are clearly not dazzled by the shrinking shipments across all the company's key products. Literally, they didn't ship more products in the last quarter in any of the things that they sell. The only bright note, if you can say so, is their services business that started off being almost nothing has doubled. But again, if you have like one candy bar and then you get 2 candy bars, well, that's probably not too hard. Now you have 1 million candy bars and then get another 1 million candy bars. That's kind of talking a lot more out there if you're talking on that move. But I was pretty invested into the earnings call last night, listening to Andy's show in one ear and Apple talking in the other. What I really saw was someone who wasn't very contrite, and nobody in the analyst community was very happy with the CEO's call from Apple. But I dug in last night after hearing a few tidbits, and it took me quite a while to go figure out actually what was going on in Apple. There are kinds of companies that have that are basically margin dependent, and that is any kind of grocery store, because they have almost no margins. So if they make up or screw up, they can wipe out a year fairly early. The other one are companies that literally print money, like Apple and Intel. When their margins start to slip, it takes so much more money, so many more sales to make up for that margin that investors flee. We will talk more about this after this short time out.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we were talking, margins may be the most interesting thing if you're doing huge amounts of business, either at your Apple or something like Amazon, where you're working on low margins. You can't afford to spend a lot of money. And on Apple, if you're making huge margins, you can't let those margins start to taper off, because almost always a massive sign that margins will continue to go lower. And that is the problem that Apple has right now. Its margins have gone from about 70% to about 66% on their iPhone business. That continues to mean that, let's say they sold $100 million worth of stuff. They wouldn't have to sell $103 million worth of stuff. They have to sell $107 million worth of stuff to make the same that they did when they were making 70% margins. So it is one of these things where if you're on Wall Street, they all have these models and spreadsheets set up if they're an analyst. And the first thing they go in there and look at is what Apple calls the average selling price. That's the average selling price of its iPhone 7 and the less expensive and even older models. Although that's a very small percentage of their business, somewhere around 5% or 10%, pretty small. I looked at it and I wasn't going to make a big difference out there, so I didn't bother to break it out. But you've really got to watch this, because guess what? It doesn't matter if they get the sales they had before. They're going to be making 3 or 4% less overall. That means that their revenue numbers may be good, but their earnings numbers still have to be moved down. And I tell you what, between the attitude of its CEO during the earnings call and the total lack of anybody talking about this, I suspect that this is a lot worse than most people think. I suspect that Apple is moving back down to the 101 area, just over $100. But I don't know. Things could change. Samsung could actually, its factory, start into a giant ball of flames, but I don't think so. I think Samsung will probably have a unit back, but this was one of those rare earnings calls where you were asked some decent and relevant questions, and as the CEO, you just kind of went, nah. And I don't think a lot of people on Wall Street appreciate that, and also probably worries them a little bit. A lot of time when Facebook was about $20, you spent about a year listening to Zuckerberg kind of everybody give the Italian salute to the analysts and Wall Street. Finally, he was forced to do something and say that he was working on trying to make shareholder value. I suspect that it will not be very long before the current CEO of Apple decides that it's in his interest not to be antagonistic to the analysts. But just a thought. But I think Apple has a lot farther to go lower, and mostly it's on that declining margins. We've now seen a very good trend down in those margins. And one of the people in the den, John from Philly, called in and asked, I think maybe a year ago, if he thought that, or what we thought about the carriers, especially here in the United States, starting to break out the actual cost of the phone instead of just saying, okay, here's one bill and you get a new phone every 2 years. We're going to say, okay, here's how much it is a month for your service, and here how much it is for your phone. And it really looks not only from the volume numbers, but also from that average selling price that maybe Apple is working with carriers and maybe rebating a little money. There may be something else going on back there because the numbers don't quite add up. And I have a feeling we'll hear more about that from analysts in the coming weeks. But of course, the first thing that an analyst has to do is tell everybody that Apple is worth $140 and make sure that anybody in their company is already to selling Apple if they have half a chance. Now, if you're on Wall Street, the last thing you want to do is create a stampede. So you'll start selling slowly at first. There'll be a lot of dubious articles and upgrades, but eventually everybody gets out. And then the souffle does fall. Anyway, I'm thinking Apple has some, for it, significant downside, not any downside that would interest me shorting it, but as a broader deal out here, certainly could see that Apple's demise and move lower certainly could hit a lot of the semi stocks out here, and that's what I'm looking for. What else is going on out here? Google, of course, is coming out with earnings tomorrow night. And when you're not going to do well on earnings, a lot of times you try to get the worst, the things that are the worst off the balance sheets already. Google is and made an announcement, I think it was late last night or this morning. They're going to get rid of any or adding any more of their Google Fiber services around the United States. That includes Tampa, unfortunately. I wished that they were coming here, but they are not. Anyway, they had about 10 other cities that they were in discussions to add Google Fiber for. This is not a big money maker for them, and uses up huge amounts of cash. My guess is that they're very concerned about the way that their balance sheet looks and are going to try to get rid of it. They also don't like all the politics that goes in, bribing mayors and all the other folks to allow them to come in. They did a pretty good job of getting around it, but the politicians are pretty evil, and most of these guys that runs cities pretty much have their hand out all the time. They are going to get around all those folks by going to wireless. They bought a wireless company, so I think they are going to come back. But a lot of analysts were very upset that Google was messing with this stuff. They didn't really understand the idea that Google wants to make sure that AT&T can't buy another company, lock up 98% of the internet, and make sure that Google does not exist without paying a tithe to the internet providers. So by being in that business, they are kind of inoculating themselves against it. But it looks like Google is going to go to a wireless distribution system. That is handled through the FCC, and city mayors, aldermen, all the other people with their hands out, the most corrupt of all individuals in the United States, local officials, will not be able to get in the way of these wireless deals. The FCC's pretty much said that you can have a dish up to 18 inches for the satellite dishes, and that pretty much applies to what Google's going to be doing. But you may do the same thing. You may put a small antenna on your house to get internet and wireless internet in the future, but that gets rid of all those pesky mayors, aldermen, all the other people that you have to buy uniforms for their son's baseball team, and you have to pay everybody off. It's horrible dealing with local can't even say it, municipalities. I said it. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And what do we got going on here? Mark Benioff, who runs Salesforce, of course, was all over Oracle's Larry Ellison this summer for being corrupt. And I thought it was very interesting because Mark Benioff was doing the same thing, i.e. buying companies that he had started from startups and overpaying for it. And I thought, well, what's going on here? I couldn't quite tell. But some Salesforce bought its tiny startup called Quip for $750 million. And it was a handful of people. I thought, well, that was awful expensive for $750 million. And then I figured it out after reading some more stuff over the last couple of days. And this looks like the new way to pay yourself off as a CEO, and that is way overpay for a price. Mr. Oracle, Larry Ellison, just didn't make any bones about it. He just sold it, took the cash. Mark Benioff's taking the high road by overpaying and basically writing it all off and giving it away, and then taking the tax write-off for it. So, but of course, he left that last little part off there, and that is that if you overpay for it, doesn't matter. You just use that to write off on your taxes as a charitable donation, and you get it all back. So is there any difference between, or do you feel a little better about somebody just being overt and saying, I'm overpaying and I'm going to give that money to me, chairman of the company, or somebody who acts like they're giving a lot of stuff away and then just writes it off on their taxes? Either way, pretty distasteful, but seems to be nobody standing in the way of these titans of Silicon Valley. A lot of people are now calling them Silicon Sultans as a homage to the sultans of the Mideast and their cartel for oil. But interesting nonetheless. AMD now also on the same trail of watching your money. AMD had earnings out last night, but I saw one very particular thing that you may want to start watching for in the very near future. And there are GAAP earnings and non-GAAP earnings. I think anybody that trades equities should know what the difference on those are. But basically, you get away with just about anything with non-GAAP. But what we are now seeing is the SEC is changing that, and you're going to have to say what you're getting away with by a little number behind GAAP, which is now GAAP 1, 2, 3, 4. There's a whole list of stuff out here. And AMD was the first one that I've seen this cycle. They did it this summer. I think it was mid-June. So we really haven't seen a lot of stocks with these non-GAAP earnings that actually have to put down the little number and or numbers of all the stuff that they're kind of having an economy with the truth about. Let me put it that way. Anyway, earnings were okay, but they were non-GAAP. So who knows what they are in actuality. But these new regulations are coming through. I read through them this morning. Look for companies running afoul of the Securities and Exchange Commission, as now they are going to enforce a great deal more of these numerals behind the gaps, and are not going to let people get away with continually writing everything off each quarter and then acting like they actually made any money. Anyway, a few warning letters have gone out already. This is probably going to be the equivalent of what is not a warning letter. I'm trying to remember what the name of. I'll think about it in a little bit. But do not be surprised to start seeing stocks implode once the SEC is saying and digging down in exactly why these folks are filing non-GAAP, or basically a nice dream of what earnings should be instead of actual GAAP earnings that everybody else in the world uses. But it looks, I read through it this morning, I think we're going to see a lot more of it. Maybe not this quarter, but by the next quarter running around, I think the worst offenders of cooking the books are probably going to have to start fessing up a lot sooner rather than later. And later is normally when they went bankrupt. And this is just the whole thing on it. The company, the 3 months, adjusted EBITDA, I think, that's it. I'm not going to get too much farther into the weeds. We'll start looking at charts here. I've talked long enough about that stuff. Anyway, we're off 6.5 points on the S&P cash. Volume is 2.55 billion shares. And we're going to get into some of the stocks that are moving today, since there's so more. I have a request to look at Tesla first, TSLA, and ask me about it. this is a stock that is a cult stock, so it's not so much about what Mr. Musk says. He may go back into, as I talked on Monday, talk more about all us becoming mole people on Mars. If you missed that whole part, he was going to send 1,000 people to Mars, but didn't explain how anybody would live more than a month or two because it's not shielded from all the radiation of space. So you're going to die of cancer pretty quick. The only thought is maybe everybody digs 10 feet under the ground and become mole people. He didn't say that. Everybody else is kind of talking about it. But when we look at Tesla, it's just kind of wound up in this range here. He can say just about anything. The people that are invested in this are basically diehards. And until he really has a problem that he can't just talk about going to the moon or Mars, and everybody seems to watch their eyes glass over, this thing will hold up. Still has a huge short position in it, and one of the reasons why I wouldn't pull the trigger, but one of these days it'll list crater, it'll go down $50, and then it will start its inevitable move back down to 40. There's just nothing in there, especially when we talk about margins like we did earlier in the show. This is a company that margins will continue to be under pressure for however long it lasts. But not a real good setup out here so far. You have to dislike the higher volume of October 17th, but of course it instantly went back into the trading range. And again, even if it does kind of mess up right here, they would really have to mess up. There's going to be a ton of people wanting to cover the shorts at any price lower. Now, take a look at some of the companies out here. I wanted to go through the ones that had been moving the most. So let me get my list up here real quick. To do this and do that. And Edwards Life Sciences messed up rather large on earnings last night. It gapped down. It's down about 15% as we speak. This is blowing through with a huge volume, and that 13 million shares hadn't gone through the low of June 27th, but I'm pretty sure it will in the next day or two, maybe even before the end of the day. Kind of hard to say. That June 27th low, 1.4 million shares at 93.83. Man, people are sending me horrible email. We'll be back. Huge volume, blowout lows. What else can you say?
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And Chipotle, I don't know what else you can say about it other than my friend Andy Heck wrote almost a year ago now that the problem with, and I hadn't really thought about it before, but the problem with reputational issues going forward, and you can take one or two things, but 3, 4, 5, 10 people or 20 people die because of what you have. I don't know if anybody ever died from CMG. Don't know. Anyway, but what you do have is nobody coming back. Trendy restaurants are like that. I'm trying to remember the Yankees guy that said, no one goes to that restaurant anymore. It's just too busy. But it's kind of one of those things where everybody in a trendy restaurant quits going and they break their habit. That's the worst thing you can do. And a lot of people did do that. Same store sales continue to be down 20%. And no one really sees that changing anytime soon. Going to open a lot fewer stores in the coming year. So this is not going to be a story that comes out anywhere soon. The most interesting part is that if you take a look at it, it looks to me like CMG's got a very good case just on a fundamental value to come back to under $300. So the pain is not far from over in Chipotle. It looks like it will continue on for some time to come. You can give me a call at 877-927-6648. You can also, email me at path@tfnn.com and, of course, post a message in the den. Anyway, Chipotle down on huge volume here. What else do we have? Ocean Rig, ORIG. I haven't had a chance to look at this one today. What else can you say about it? It's a penny stock. Oh, the one I wanted to look at out here was, hopefully, come on. I'm losing internet here. Hopefully I don't lose everything else. Come on. Give me just a second here. See what else we have. What was it I wanted to look at? Oh, love. That's what it was. Come on. There we go. We were talking about, a few days ago about a nice Gartley pattern. This thing went just a couple pennies above it, but was one of the better looking Gartley patterns that I said that had developed in the market. What I really liked was the huge energy down from the June 15th high down to this August 2nd low, 8.5 million or 8.5 on my power law vector indicator on the way down, on the way up from the September 21st low to the high on October 21st, just 5.7. So when we're looking at the energy up and down, there just wasn't any energy up off that 21st low. And then, of course, we got into that with 20% lighter volume. Not a lot, but I just this one was one of the better looking ones out here, along with GFI. I haven't followed up on GFI here. Let's take a quick look at that. Still a Gartley pattern. Maybe you'll get something out of it. I just wasn't a big fan. You got about a 10% bounce out of it. I think it's still a Gartley pattern out here. You had your Gartley pattern. Sometimes these things do go sideways for a little while. This was one of the better looking ones out here in the gold. But gold and crude, I just don't see a lot of upside in them, but some of the better looking ones. Other stocks of interest out here, Pandora. I don't understand this business of music. It is a huge loser. Warren Buffett's a big fan of saying how to end up with $1 billion. Let's start with $2 billion and buy an airline. I think maybe you should change that to start with $2 billion and buy a streaming music company, because none of them make any money. This did dip below the July 22nd low on earnings, $11.61, 26 million shares. Got 16 million shares already. Everybody keeps on saying someone's going to buy this one out. Kind of hard for me to figure that out at all, but not beyond the scope of reason. Now, on the winners out here, a little heard of stock for a while, but it's making some long-term highs out here, and that's Logitech. They've been making slow but steady moves higher in this market and gapped away for the second time, by the way. Now, this thing, let's go back farther. This thing, had exactly what you want to see in a long-term stock, and that is the gap away. I was waiting for this thing to maybe come down to 1950 to buy it. Never got the opportunity, and that's the way it is sometimes. But you got to have your risk reward, and I wouldn't chase. Anyway, this is done at second time, which means that you're probably thinking that Logitech gets one more gap, and this would be a 3-gap play to the upside. But if you want to see a great consolidation, then the sign of strength in a chart, not a lot of these are that clean. This Logitech one is very clean. That is, you've had all this time to set up the move higher, which is going back to 2014, December 4th, starts basically consolidation range. You move back and forth. You spend a long time building up steam, and then eventually the thing just gaps up and gaps away, and it does so on lots of volume, and it just keeps going. But what a good example of that one. And since I only play the loser horn a lot, we'll play this one as it's the biggest winner of the day. Yeah, and Logitech did leave it all behind, didn't it? Just two big, massive gaps up. No chance for the poor, innocent trader like me to get into this one. Oh, well, there'll be a lot like these in the past. There'll be a lot more in the future. But you have to have your discipline, or you will soon be broke and out of this business. Other stocks of interest, a lot of these had a lot of short positions in them. Akamai had a huge short on Monday. People were piling all over it. As I've said, there's a lot of these double gaps, in this case, more than double gaps out here, and I'm kind of looking at these things. They're either gapping to them or gapping down to them. Akamai is gapping up to this gap that is about $67, doing so on very strong volume out here. This one also had a nice consolidation that goes from, February 9th through the entire summer, got up here to these highs. Didn't have a lot of volume the last few days, but, 11 million shares today. It literally gapped right into the gap down that goes back on 21.7 million shares. And that's really the downside out here now. You're into a giant supply line with Akamai and a lot of gaps. We'll look at this and more. A few more winners out here to take a look at. as we go higher and higher in some of the winners. Be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we got a few more stocks to look at. Any close below 2140, I suspect, is another huge sell signal in this market. It's giving you every kind of signal in the world to tell you that there are problems with higher prices. Could we go a little higher? We could. I don't think Tesla's going to do anything, though. Maybe Google, but probably not. And of course, Amazon. You know, I don't know what's going to happen on earnings tomorrow night, but I have to say that the way it's acted probably tells me a couple of things. One, that a lot of people are very worried about all the money they're spending on aircraft. The other is how if there was a company that was setting itself up for antitrust issues, there couldn't be a bigger company than Amazon. They're doing everything in the world and doing it very hard to make it look like they're having antitrust violations everywhere you turn. This administration, not so much, but I don't care who wins the presidency, my guess is that the next administration will be very active in antitrust, and there's probably not a bigger one out here than Amazon. In everything they do, everything they touch, they try to take over, from UPS and FedEx with the airplanes lately, to just everything in the world. And if you just have to go back to, what was it, 2000? I think it was 2000, when Microsoft had its first issue with antitrust. The thing lost like, I don't know, even back then, I think it lost like $8 billion in 5 minutes on its antitrust. But that would be, if I was an Amazon guy, could it go higher? I would always worry about from now on in any new administration. So this is probably what, January issue, maybe later, is that whoever comes in starts nosing around because it's fairly blatant. If Microsoft or all the other people have been chased around with antitrust violations today, all probably scratch their head and go, look at what Amazon's getting away with right now. You got to look at that as probably the biggest problem that Amazon could have in the future. Again, this is a little bit farther down the road. For earnings tomorrow night, I am just looking at the vast amount of money that they're spending on aircraft to really go after FedEx and UPS. And in the short term, will it be okay? Yeah. But in the long term, it really does open them up just one more time to all the stuff that they're literally doing to be vertical, which is normally where you get your hand caught in the cookie jar. All you got to do is go back to that, what is it, Penfield Jackson? I think that was the judge's name for the Microsoft one. But if you go back and look at just how slammed Microsoft was on that in the, I think it was early 2000s now that I think about it. I'll look it up again and we'll talk about it tomorrow. But just keep an eye on it. I'm not a big fan of trying to buy Amazon up here or play it for the earnings. But I think whatever happens after a few days, my guess is that it will start moving down. Like I said, maybe in the next 6 months, I suspect it will be back down in the 650 to 600 range. What else do we have? Wanted to look at a couple more out here. iRobot, IRBT. Oh, we're out of time. Oh, the time is always too short. Always too short. Anyway, earnings tonight, Tesla may move the market. I think that's about it. A little bit. And, of course, probably on hold until we see Amazon and Google tomorrow night. We'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you...
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com.
You're watching Tiger TV.